Hi, welcome to Trading with TK, teaching you to turn ideas into money. We're at www.tradingwithtk.com. It's Tuesday, January 6th, also known as Little Christmas from where I come from. And Little Christmas is the day that you take all the Christmas decorations down, you take the Christmas tree down, and you put all that stuff away until next year. That's what Little Christmas is, January 6th. It's also a day that the market was able to move forward again on the upside. Nothing big, but I don't expect big moves in the market. I expect slow, steady wins the race. Now the moves in the Russell 2000 and in the QQQs, which is basically the NASDAQ market, are a little more pronounced than the move in the Dow. But everything's moving in correlation with each other, which I like. I like to see all the averages singing the same song, and at present time, that's exactly what they're doing. They're all singing the same song. They're all in these upward bullish formations. The Dow, to me, looks like it's in a reverse head and shoulders, which I've been talking about for weeks now. I had a lot of non-believers about that, but as time goes by, it's starting to look more and more like a reverse head and shoulders. It also has that, what I like to refer to as a dangling participle, better known as the head of the reverse head and shoulders. And it's also taking on a symmetrical look, meaning the left side now is almost about the same amount of days as the right side. Left shoulder, right shoulder. I'll show you what I mean when we take a look at the Dow in our final segment. We'll look at all the major indexes and we'll see how they're doing, and I'll tell you what I expect, or at least what I think makes sense for the market to do, and that is to move forward, and then we'll have another little pullback. But I'll show you where I think we can get to first before we have any kind of a serious pullback. Another new idea for tomorrow. Stock is Denny's, D-E-N-N. It's a restaurant. We've been in it once before. We had a good trade in it, but it was quite a while ago, probably 6 or 7 months ago we had the trade in it. But it looks like it's ready to go again, and I'll show you that chart, and I'll show you how we're going to take that idea and turn it into some money. I'll be right back. Okay, here we have a daily bar chart of the stock of Denny's restaurant. D-E-N-N is the symbol right up here. This is a call on the long side. We'll be looking to buy this tomorrow, right around where it closed, $2.03. I don't expect it to come in for sale much. You may even have to chase after it a little bit. If you have to pay 207 or 210, that probably be okay. I'll tell you exactly why in just a moment. But anywhere around the close of 203 would be a good spot. My target on the upside is 315. Somewhere up in this area. Could be 310, could be 308, could be 320, somewhere up in this area. This is our first resistance area. It may want to go through that eventually, but for this trade, from where we're buying it here, that's going to be our first target. We may re-enter at a later date, but that'll be a completely different trade. So a sell stop for people who want to know where they should sell if the pattern looks like it's deteriorating. I would say a close below $1.59 right there. Okay, this is what I see. We've got another ascending triangle. You can see here how it broke out, pulled back, broke out, it's pulled back, and it's just starting to turn the corner for another breakout. This breakout may get us up to our target. So you can see how these ascending triangles work, where they break out, then they always pull back. And this is why I say I don't expect this stock to come in much tomorrow at all, because this is the pullback already, and now it's starting its up phase. So that's why I said you may have to pay up a few cents to get into this stock. Stock traded almost 600,000 shares today, so it's somewhat liquid, but I wouldn't say it's very, very liquid, but you'll be able to get your hands on enough. So let's recap that. That's Denny's, D-E-N-N, is a call on the long side, and if it plays out the way I think it's going to play out, we'll probably make ourselves $1.10 on that. Now remember, it's only a $2 stock, So that would be a 50% return on your investment. All right, let's go take a look at the major indexes. I'll show you what I think makes sense, what should happen in the coming days. Okay, here's the daily bar chart of the Dow Jones averages, and this is the reverse head and shoulders that I've been talking about. Of course, this being the head. Also, this is what I call a dangling participle. For those of you who have been watching me for a while, you know exactly what I'm talking about. Now the symmetry, if you count the number of days from the head to the left shoulder, it's 29 to 30, and today's date actually is the 28th day. So there's some symmetry here. The right side is now starting to equal the left side. So this is what I expect to happen. I expect the market to get to this high on this move next couple of days, and once it gets to this high, I expect it to pull back again. I don't expect any kind of a small pullback until we get to our target here, and then we'll pull back, and probably when it pulls back it will hold this breakout price. In any case, it will hold this. In other words, the next time it pulls back, the low on the pullback will not exceed this low here, because we've got, once again, low, high, higher low, higher high, higher low. We're putting in the higher high, and on the next pullback we will also have a higher low again, and so on and so forth, like a staircase. That's exactly how I expect this market to go up. But as you see, things are moving slowly. Okay, well, a quick look at the transportation average, and you can see this has clearly gotten through that resistance area there. It's clearly through that now, and I believe it's on its way to that resistance area, and I do believe it should get there before we have our next serious pullback. But remember, the pullback will be above this low. Okay, here we have the Russell 2000, the daily bar chart of the Russell 2000. This never really had a reverse head and shoulders, but it could be looked at, you know, as a V bottom. In any case, this side of the equation, you see how symmetrical this is becoming? This side of the equation was always in an ascending triangle formation, and I said days ago that that if it is an ascending triangle, and it certainly looked like one to me, that it should break out above that, and that's exactly what it did. You can also see how the move is becoming a little bit more extended than you see in the Dow. So this is acting a little bit better than the Dow. But you know, they're all acting in concert with one another, which is what I'm happy to see. Quick look at the SPY, which is basically the Standard & Poor's 500, and here we are basically tracing out what also appears to be a reverse head and shoulders. Okay, the head, left shoulder, and we're still working on this right shoulder. The actual breakout of this head and shoulder, reverse head and shoulders, will be when we finally break out through this high here. That will be the breakout, and then the whole formation will be clearly in place. And last but not least, the QQQs, which is the top 100 NASDAQ stocks, and still in this ascending triangle. It looks very much like the Russell 2000. That's our triangle. This is our target. So I think the market should get up to here, and then we'll have another little pullback. And then the next time up we should get through. So let's see how it plays out. I tell you these things because this is what makes sense to me. This is how the market moves, and these are the things that make sense to me. So that's my view of the market till tomorrow. This is TK signing off.